Hello dear students, welcome to accounts classes for beginners. The previous class what we have seen? We have seen subsidiary books, only purchase book. Now today in one problem we'll see how to prepare purchase books, sales books, purchase returns book and sales returns books. All these things together in one problem we'll see. Subsidiary books mainly we consider or we calculate cash book and purchase book, sales books, purchase returns book and sales returns book. These 5 we calculate. Now 4 together in one problem, solid understanding you will have. So let's get into the problem. The problem is given here. Enter the below transactions in proper subsidiary books. Proper subsidiary books means the transactions are given, whatever you feel, wherever you want to take these transactions you can take. They are not asking you to prepare purchase books, purchase returns, sales returns. They are not asking anything. Only just by looking at the transactions, looking at the information, we have to decide what we have to prepare. Okay. So now let's see the transactions. The first one is the 2011 October sold goods to William. Sold goods to William. This is related to the sales book. If they said sold goods to William for cash, then we would have taken into the cash book. Sold to William, cash is not mentioned, means it is purely related to the sales book. Already I have drawn the tables of this purchase book, sales book, purchase returns, sales returns. Proforma is already ready. As I told you in the previous class, proforma is date, particulars, invoice number, LF, amount. Before amount, if you have any kind of detailed information to be drawn, then you can write details column also. Now here it is not required, so I did not take directly taken the amount. So same columns for sales books, purchase returns and sales returns. Proforma is ready. Now simply we have to read and every transaction and we have to just post it. Now first one is 2011 October sold goods to William. It is sales. It comes under the sales book. So we'll write 2011 October 1st. 2011 October 1st sold goods to William. We'll take the name of the person. If details are there, that also we would have taken, but details are not given. Simply they are saying sold goods to William. So we'll take the name of the person to whom we have sold, Williams. Williams, how much we sold? 510. Invoice number LF we don't write anything. So directly 510 I have written. That is over. Next one, bought furniture for cash. Bought furniture for cash. Furniture, purchasing furniture, any asset purchases we don't consider. We don't take it into this book. And also for cash. Cash also we don't take. This transaction comes into the cash book. Already we have done cash book, cash single column cash book, double column cash book, triple column cash book. There it comes. Purchased furniture means in cash book, credit side you will write by purchases. Okay. Now here we are not going to consider because it's a cash transaction. Purchasing furniture and cash transaction. Next fourth one is here. Purchased goods from John. Purchased goods from John. Purchased goods from John. This is purely purchase book. This comes under the purchase book because purchased goods from John. Cash is not mentioned. Asset is also not mentioned. So it is related to the purchases. Purchases goods from John means purchase book we can write. This is on 4th. So we'll write 4th, 2011 October 4th. Purchased goods from John. We'll write John. John 580. Over. Next, purchased goods from James. Purchased goods from James. This is also related to the purchase book. Purchased goods from James. Cash is not mentioned and asset is also not mentioned. Simply goods. So it comes under the purchase book. So we'll write it in purchase books. So on 7th. So purchased goods from James. So I'll write here James. James, it is 230. 230. Next, 8th, returned goods to James. Returned goods to James. Already purchased goods from James. Now we are returning to James. Purchased from James. Now returning to James. Means it is purchase returns. Purchase returns comes in the purchase returns book. Purchase returns books, it's already drawn this table. So purchase returns, this is on 8th. So I'll say 2011 October 8th. Returned goods to James. So I'll write James. To whom we are returning? Returning to James. How much? 30 rupees. 230 goods purchased. Out of 230 we are returning 30. That's over. Next, goods bought for cash. Goods bought for cash. Cash we don't consider. We'll ignore it. This is not a cash book. We are preparing purchase book, sales book. Only credit transactions. This comes in the cash book. Cash book which side? Credit side. Okay. So anyway we are not taking here. Next one, goods sold to hurt. Goods sold to hurt. This is purely comes in the sales book. Goods sold. Cash is not mentioned. So it is comes under the sales book. So this is on 14th. To whom? Hurt. Sold goods to hurt, cost of 130. Over. Next, received goods back from hurt. We have sold goods to hurt, 130. Now 17th, receiving goods back from hurt. We sold, now returning back, means sales returns. Sales returns comes in the sales returns book. So this is on 17th. 2011 October 17th. Receiving from hurt. So I have written hurt. How much? 20 rupees. And 28th, sold goods to David. So this is over already. Now sold goods to David. Whenever you are selling goods to someone, so this comes in the sales book. Cash is not mentioned. Means purely we can take it into the sales book. So sales book is here. Sold goods to David, 28th. 28th, sold goods to David, 1000. Over, we have posted everything, we have taken everything. Now closing. Closing will be same like previous problem. We'll total up first. 810, this is transferred to purchase account. From purchase book to purchase account will be transferring. Transferred to purchases account. Debit. Purchases account, debit. Why debit? All the purchases debit side. So we are transferring purchases account debit side. From here to purchase account will be transferring directly. In the same way sales book also will total up. This is 1640. 1640 will be transferring to the sales account. Transferred to sales account credit. Transferred to sales account credit. Why credit? All the sales will be on the credit side. Why credit means? Why only credit side? Income. Sales is income. All the incomes credit side. We know it as per the nominal account. So we are crediting it. Next, purchase returns book we are having only 30 rupees. Purchase returns also transfer into the purchase returns account. Purchase returns book to purchase returns account. So we'll write transfer to purchase returns account, here it's debit. Purchase returns credit. Purchase returns account credit. In the same way, sales returns amount is 20 rupees. We'll transfer it. Transferred to sales returns account, sales is credit. Right? Now sales returns will be debit. Transferred to sales returns account, debit. That's all. You can note down or you can take a screenshot. Hope it is very clear. One problem which will give you more clarity about all the books. One thing remember, read each and every transaction which is given in the problem and decide that where does it comes. Is it related to the cash? Is it related to the credit? Credit means you have to be very careful. It should be goods only. Asset purchased, we don't consider into the purchase book or sales book. Asset selling, no. Asset purchasing, no. Goods purchased for cash, no. So like you decided we are going to take in purchase books, purchase returns book, sales book, purchase book, sales returns book. Only purely credit transactions which are related to the goods purchased, not asset purchased. If you remember this simple concept, so these books are simple. Once if you know that sales and purchases, returns also you can easily identify it. The returns also, and the end what we are writing, transferred to so and so account. Which account? Here it is transferred to purchases account. Debit, purchases debit. In the same way, sales will be credit, transferred to sales account, credit. Transferred to purchase returns account, credit. Why credit? Purchases are debit, so this is credit. Transferred to sales returns account, debit, because sales are credit, sales returns will be debit. Simple, this is the problem, one problem which will give you much clarity. Hope you understood the topic. And in the coming classes, we'll see more topics, more subjects. Please go to the description box of this video or go to the playlist of the channel. Then you can find a different subjects, different topics. You may be doing CS, CA, ICAA or CMA, any other course, BCom, MCom, MBA, whatever may be your course, even engineering students also. Some topics definitely which is already included in your syllabus, so that you can identify and learn those topics, learn those subjects, and also do share these videos with your friends, juniors and any of your sons, daughters or nephews, anyone near and dear. So study well, get good marks, wish you good luck.